There's an opportunity now to take a little bit of a step back and take a look at a bit more behavioral science behind trading. And the opportunity as we effectively start out a new year, 2021, it's time perhaps maybe to brush aside the past and take a look at how we plan things as we prepare ourselves for the meat of this new year. Joining us now from IntensiChi is Ron William, who is a behavioural trading specialist. Ron, we've spoken to you before about a lot of technical analysis, and I know that you also have a specialism through IntensiChi with this behavioural side, which I find particularly fascinating. I know a lot of IG clients do too. I want to begin, first of all, if I can, by setting things up and finding out how we go from this trying to get rid of the bad stuff that happened last year and trying to bring forward the good stuff, and how we prepare ourselves for the new year ahead.
Well, it's a naturally a top trend topic, and great for us to start within our discussion. The 2021 year, I think will go down in the history books as the year that followed everything that happened in 2020, so the pandemic, the lockdown, and all the rest of it. And so for a lot of traders that are really kind of looking to have a strong best year ahead of them, they're having to deal with the challenges of the past. So where we start and how we start on that starting line of 2021 is really critical, just like it would be for any high performance professional athlete or anyone else in that kind of a pressured discipline focus. So that's probably the main point. The idea behind The Power of Now, a famous book written by Eckhart Tolle in terms of being more present-minded in life and in markets, but then also the risks of being stuck in the past, which neurologically is actually a very natural thing. On average, we experience about 60,000 thoughts a day, and the majority of them are negatively charged memories. So in a way, we're driving a car looking out of the rearview mirror. It's actually referred to as rearview mirror syndrome by some therapists, and it blocks us from actually moving forward. Drawdown's a case in point. If we've suffered any drawdown or pandemic lockdown, negative impact, will be the weight on our shoulder that'll stop us from moving into the present and future. It's great to have a map to the future in order to kind of keep us charged up and disciplined for the path ahead. But we mustn't get overwhelmed by performance targets and forget that it is a stepping stone of marginal wins that will ultimately achieve our trading goals. So be in the present, or the power of the now. Be aware of the past, but let's learn from the mistakes of the past, not get stuck in the mud of the past, and have a map to the future, but try not to get overwhelmed by performance numbers as a case in point.
Well, it's an interesting transition, isn't it, from one period to another, especially when you have a new year, because it does give you a sort of a fresh outlook on life. But transitioning from something you've done, you've passed, you've finished with, and bringing something new is almost like you're growing into something. How do you get that transition up and running?
Yeah, well, I mean, essentially, our first focus point is a linear educational explanation, but the reality is it's much easier said than done, and that's the big part of trading psychology and why it's so important in the process. This chart shows the dynamic nature of change, and that's the key message here, because I want to keep it real and practical. And what this chart shows is the two different outcomes according to your mindset: fixed versus growth. There's a lot of great work done in the space of growth mindset, books published on the subject and whatnot. And essentially, it means that we're able to adapt, assess, and learn from any ups and downs that we've experienced in life or markets. And you can see there that the virtuous cycle of growth. You start off by saying, I can grow my brain with the hard world, but then you might stumble, learn from that failure, fail forward ultimately, and then progress with a pattern of higher highs and higher lows to keep it kind of chart focused. Whereas the opposite is really detrimental, and it's a downward spiral, the academic fixed mindset, where we just stay stuck in the mud. We don't learn much from what's happened, and we don't like to, and it's an ongoing pain pattern. And so for a lot of traders, it can be like this without even realizing it until much later in the process. So it can get frustrating, and it can lead to a lot of just challenging growth opportunities. So it's much better to embrace the different highs and lows in trading, and try and progress in some kind of a systematic approach.
This is all very well, but of course things don't always go to plan. And I know from my experience that you've got to cope with the lows in order to get back to some of the potential highs. Very difficult.
Yes, so this is the work in action, real time with live traders that I've been working with for some years now, but actually here and now into this new year of 2021. And so the exercise that we did in order to address the challenge, how can we make 2021 the best or strongest trading year, was to address the past trends of 2020 in order so we can move forward by learning from the past. And so the task that they were set is to do timeline analysis. They'd go back in the year that passed and plot out the highs and lows according to achievements and level of mindset. So mindset, a score of 0 to 10 in terms of just how high or low the traders had experienced at that month of the year, and then the actual achievements either in trading performance terms or just in terms of progression. I always recommend a blend of progression alongside learning progression alongside performance in terms of trade performance. And naturally, as you can see here, there's a big low in February and March around the time of the pandemic, and then it's blue sky territory since then, correlating with the FOMO rally that we've seen in the stock market. So you can see here, as the markets go up, so does it elevate our psychology. So no surprises there, but you'll see that there are swings up and down along the way because each trader will have their own high and low points. The question here is to highlight the big achievements, the challenges and lessons from the challenges, and ultimately to work out how all of that information can be useful in the here and now, because it must be meaningful here and now in the new year.
Let me move on, if I can, because there's something else I know that you talk about, and this is something I've never come across before, and that is the analysis of the grief cycle. Throughout life, we quite often, through periods, have to deal with grief for whatever reason. And of course, aligning it with the trading cycle is interesting because it goes back to this idea about trying to find the resources to take us away from the downside of what we might have experienced as a trader. Tell me more about the grief cycle and what you can tell us about it to analyze it to help us.
Yeah, so I really encourage traders to dive into this material developed by a Swiss psychologist back in the 60s that studied bereavement, grief patterns. And there is a lot of correlation with what traders will go through when they're suffering drawdowns, whether it's a negative drawdown or they've lost profit, but also given the environment that we've been in terms of the disruption, again, the pandemic and the lockdown and everything related to that, it's collectively many people and traders are going through a stage of this cycle. So the big pain point for a lot of the traders that I've been working with has been shock. Point blank, that's been the big issue for a lot of traders from last year. Now, because many of them would have been profitable in the second half of last year into this year, they're probably a little bit more uplifted in the second part of this cycle. But still, what's interesting is there's a disconnect between the money that they've made in the market and how they've dealt with the disruptive environment outside of their trading. So it's not a one-for-one outcome. If your performance is good, that you're going to be good, especially in an environment like this. There can easily be a breakdown in the relationship between the two. So the idea is, in a shock situation, you have to have a reference point of some sort, which is why this work is so useful. Shift, usually to denial, disbelief, not wanting to come to terms with what's happened. And this actually happened round about the pandemic, most people, had a cognitive dissonance moment where they just found it very difficult to actually understand what was going on, let alone do anything about it. That then led to frustration. Lockdown's probably a great example of that. Recognition that things are different, but there's a little bit of anger in terms of, when are things going to change, when are we going to go back to normal? And then finally, a low point, low mood, lack of energy, that can really hit hard on the health. And that's certainly been a pain point for many of the traders I've been working with in terms of how health has been a challenge for them. Good health naturally gives them better energy and focus for the markets. And then once we get through that negative part of the cycle, we can then reach to a point of acceptance from all of the heavy lifting challenges that have happened, and start to re-engage, start to make tangible, constructive decisions. And then ultimately, right on the far side of the chart on the right, integration. We're able to then make changes and start to have a renewed identity or development of what's happened in order for us to then move forward. And this really adds the grief psychology to a shock situation and makes it a lot more tangible than we might have otherwise understood.
And of course, all tied in with this is the way in which we deal with the other needs of our bodies as well, and that is exercise, that's outside interests, and that's this idea of a full life. We've spoken about this before in other contexts. How do you illustrate that in what we're talking about at the moment?
Yes, so the concept of having a balanced life has been there since the beginning of time, I think. It's certainly healthy to have a healthy life, work or trading balance. It depends what type of trader you are. I mean, there's some traders out there who are all into trading. They live it, they breathe it, they love it. And if you're that way inclined, then this wheel is going to look fairly skewed, where you're going to be strong in one area and weak in everything else. And that's fine. If that's your choice, then so be it. And most high performance professionals will make that sacrifice. But for the average trader, and most of the ones I speak to, either professional traders or those who are doing this as a kind of secondary income, or they're just managing their money as a best practice, they will want a viable and sustainable strategy. And to do that, other areas in their life need to be balanced. And so think of the mental, physical, emotional, and what some people call spiritual side of things. So mental in terms of career and learning, in terms of your growth, physical, wealth, and health. Health has definitely been a big one in the recent times. Wealth, I think, for those that maybe have small to medium-sized businesses, it's or even that they're concerned about job security, they're more focused on how to develop better money practices. And relationships, whether it's with family, friends, life partner. And then finally, on the spiritual side, it's more to do with our relationship with ourselves or with our kind of outer guidance system. Whichever way you want to look at each of these areas, the idea is to score relatively high in each one, especially the ones that are a key priority for us. And by doing so, we can avoid the negative impact of having a weak leg on the stool, make the whole structure kind of fall over. So if we're strong in some of these principal areas, then really some of the best traders tend to do much better because they have something to fall back on. The other thing is, in a boom market like the one that we're in, as part of this FOMO rally, we can get by just being happy with profits. But if the market environment were to change, and it often does, nothing moves up in a straight line, it's really important to have a strong structure so that if we're not making the profits that we made in the past, that we have other areas in our life to keep us balanced. An important subtle point that I've picked up with many traders when they go through the cycles of their P&L equity curve. And just the last point I'll make, Jeremy, in terms of action steps, this isn't just a static picture on the screen. This is a tool. It's a dynamic tool for self-assessment. I would use it for that, reflect on it, but then do so on a regular basis. Usually I encourage weekly on a high active basis, or at least monthly and quarterly, and then take action steps on the back of whatever you think you need to change. Make sure that you're doing something with this and it's not just a theoretical diagram.
What about, to round it up, what about goal setting in all this? How do we go about that?
Yeah, so again, this is one of those age-old concepts. We all like to, have a goal. Waking up in the morning is one goal, and trading is another. Goals affect life and markets, but the main point is, how can we do goal setting, or as titled in this slide, goal mapping, in a more dynamic way? So this technique is a brain-friendly method developed by Brian Main over 20 years ago. It's been field tested with 4 million people around the world, including leading Fortune 500 companies. And the idea is to combine the left brain with the right brain, which is another way of saying our creative mind with our logical mind. So avoiding that linear list of things that we want to achieve, like be a successful trader, be financially free, produce a secondary income, whatever it might be in the trading or general sense, that we have a way to really kind of immerse our mind in that goal that we want to achieve, and by doing so, have more chance of actually manifesting it. So what this does is it combines pictures with words. It provides a roadmap of the two, with an action plan. So you can see that there's a date that you start, a date when you have a target date when you achieve your goal, and a breakdown in the middle of the timeline. And then, of course, a how and a who. So how are you going to achieve it? Who's going to help you? So maybe you might have a trading college that you join. Maybe you sign up with a performance coach. And then, of course, what's your main goal? What are the sub goals? And most importantly, right at the top, the why factor, the fire that drives you doing what you're doing. And that's critical for any trader, because the number one reason why people do not trade well is because they give up too early for a variety of reasons. So your why factor is going to be really key to staying in the game and being disciplined.
So round it all up for us, because we've been on a bit of a journey here, taking a look at this transition between year to year, and this idea of trying to shed the bad and trying to adapt to a new idea, a growth mindset. How would you encapsulate it all in one final word to those that are interested in the subject of how to behave around this subject of trading?
Yeah, so always remember that psychology is the name of the game. It's an 80-20 split in favor of psychology. So it will be the be-all end-all. If ever there was a holy grail strategy, it is your psychology. And so as part of the process that I've been developing for some years, I deem it a peak performance or a mind-body ecology. Essentially, that breaks down into a 3-step process: awareness, change, transformation. We've briefly spoken about this before in past sessions on trade psychology, but just to recap for those that maybe need to look at it again, awareness is your starting line point. We need to know what we don't know, and ignorance is not a bliss in the trading world. It's really important to learn, how to be self-aware about our nature and our nurture nature, about certain survival instincts and trading temperaments that we're born with, the biological influences, nurture in terms of the environment, certain beliefs and values that we may have inherited from closest and dearest, whether it's family or friends or our work, but essentially, what our beliefs and values suggest about trading, risk, and money, all to do specific with markets. And once we're aware, there are levels of awareness. We can then start to initiate change through various models. I use a combination of behavioral science and neuro science, so the brain and behavioral models together. We need to then practice those change strategies for a sustained amount of time, minimum of 30 days, and then multiples of that, in order to then achieve sustained transformation and ultimately to be successful traders. So this is work in progress and life in progress, but it's a three-stage process of awareness, change, and transformation.
Okay, Ron, that's great. Look, thank you very much indeed for bringing this to us, and it'll help us to, as I say, shed away some of the unloved parts of 2020. Of course, we've all got plenty of those, but thanks indeed for joining us there as we look out to the meet of 2021 with a new attitude to our trading. That's Ron William from IntensiChi. For more videos from us here at IGTV, join us on Twitter at IGTV and subscribe to our YouTube channel.